So it's just insane what is currently happening to CCIV again, actually being up almost 6% today as well. And this also means that it's going further up after we spiked almost 450% in January and the recoveries afterwards. So what we are going to do today is give you an updated insight into what is happening to CCIV's stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, so taking a look at Churchill Capital, you'll quickly find that the company is so incredibly interesting for investors due to bringing the EV producer Lucid Motors public through a SPAC. And there are a few really crucial factors that are driving this massive buzz, particularly among retail traders, with the first of which being the broad arena in which it competes. In fact, there were a slew of stocks in the EV sector that skyrocketed last year, with some gaining insane percentages along the way. However, because there are so many companies in this industry and virtually every single car manufacturer is converting to electric vehicles, if they haven't already, it's extremely difficult to compete. So what drove the stock up so high in the first place, and this is critical to consider for the projection in the end, is investors' hope that a company like Lucid can actually compete with giants like Tesla. But despite a ton of people claiming that this isn't possible, there is one crucial thing you need to bear in mind: Tesla and Lucid are not the same. When it comes to the Lucid Air Dream Edition, for example, that started at a whopping $169,000, Elon Musk on the other hand has made clear that Tesla is focused on the lower end of the spectrum in order to make their cars as affordable as possible. And this ultimately makes Lucid Motors now face a much lesser challenge from a large, if not the biggest, competitor in the electric vehicle industry. But, and this is also extremely crucial to keep in mind for our projection at the conclusion, Tesla is currently considerably more experienced than Lucid. Lucid hasn't even shipped a single car yet, according to the company, with Lucid's promises for the future being the only thing we've gotten so far. Nevertheless, vehicles are actually expected to be on the road by the end of 2021, if all goes well. Furthermore, Lucid's first production model, the Lucid Air, will be assembled at the newly built facility in Arizona in the second half of 2021 in order to meet the previously announced 9,000 reservations for the Lucid Air. Assuming, however, that the company indeed is able to deliver its first vehicles within the specified deadline, enormous price increases are nearly guaranteed. Lucid expects to sell more than 48,000 vehicles in 2023, a large increase in production over the following 5 years, including the debut of an SUV. So its management's expectations for the next 5 years make it easy to understand why investors are so thrilled about the company. But you should also keep in mind that there is a ton of competition. And when even companies like Tesla face pretty large challenges literally all the time, you can expect Lucid to face some even bigger ones as well. In addition, it is important to highlight that the management provided the predicted financial data. So to sum it all up, Lucid Motors definitely has huge potential if it can prove itself in the extremely competitive EV space and against giants like Tesla. But due to the diverse consumer targets of the companies, this is not as unlikely as you might think. Buying right now, on the other hand, is somewhat risky, which is why we recommend waiting for the first actual cars to be delivered, as well as any subsequent negative or positive news, before buying or adding more stocks. However, if retail traders continue to hype the stock up, some short-term growth or new price spikes are very likely. Alright, with that being it for today's video, thank you very much for watching. If you like this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot, and see you next time.